Welcome to the Crypto Teacher Stock Channel. And guys, please like and subscribe if you do like what you're listening to. Please inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, you understand that everything is planned out. Now, guys, I got some big news for the stock market. Very, very big news. Guys, we have ChargePoint is looking to do an IPO, the world's largest provider of electric vehicles charging stations. Now, guys, I've been over this. Electric vehicles charging stations already. I only have a few videos up here. So, guys, this is very, very big. Anything that has to do with electric vehicles, charging stations, we want to make sure we're doing our research and investment. Remember, I'm not your financial advisor, it's not financial advice. Please do your own research. But this is big. Another one, guys, we have Palantir is going public September 30th. They're not doing an IPO. They're just going public, doing a reverse. So, guys, we know who's behind Palantir. Peter Thiel. And who else? Yes, right, the CIA. So, guys, remember, there's nothing but data, data, data. Those are the things we want to invest in. Anything that has to do with cloud, software, data, electric vehicles, charging stations, gaming. Those are the things we want to make sure we have our money in, because we know down the road they're going to be big, and especially if you're young and you have 5, 10, 15, 20 years and you want to put your money in something. That's what you do and ride it up, especially when it comes to the emerging markets. Asia is going to be big, guys. The Belt and Road. I'm going to do videos on that. If you don't know anything about the Belt and Road, you can go to my Crypto Teacher channel. And also, I've done plenty of videos on that. But then also, guys, let's get into the actual stocks. Natural gas stocks, guys. Natural gas is cheap. Get in while you can now. The reason why we're moving away from oil and we're going to natural gas and electricity. So that's where we need to be headed. Basically, I've already been over Western Digital, great dividend stock, Intel, as far as with the chip stocks. Basically, we have DraftKings, Rush Street. Of course, DraftKings has topped out. It's going to come down, but I went over Caesar. Caesar blasted off Friday. So, guys, I gave you that information even before it blasted off. So make sure you're staying up to date. I went over the airlines. American Airlines secured a $5.5 billion deal with the Treasury as far as the loan is concerned. We're still waiting on that bailout, but $5.5 billion, of course, that's going to help the stock rise, guys. So make sure we're looking at airline stocks and then also the cruise stocks. Travel is going to start picking up, guys. I know that we're still dealing with the C word, but the fact is that people still have to travel. They want to get out. So definitely those stocks are going to make a rebound. And lastly, guys, we have Germany is starting the universal basic income. This is an article from last month. Basically, they gave, I think it was maybe 100 to 200 people, $1,400 for the next 3 years on universal basic income. So, of course, it's not going to take 3 years. That's what the digital crypto and all that good stuff is about, the digital wallets, where they're going to actually be airdropping this money to these digital wallets for the universal basic income. That's where we're headed. But, guys, make sure that you're staying focused on tech stocks, electric stocks. Guys, just like I said, the stock market is 70% tech, guys. Anybody that has anything to do with software, data is going to be big. Make sure you're staying up on that. Just like I said, that's all I have for you. Don't forget to like and subscribe. Spread this video. Y'all have a wonderful day.
Thank you, Sarah. Let's bring in Pasquale Romano. He is the CEO of ChargePoint, joining us from the company's headquarters in Campbell, California. Pasquale, let's talk about the SPAC IPO that you guys announced today. You're going to be combining with Switchback Energy Acquisition, a deal valued at $2.4 billion. You're going to get, basically almost $500 million in revenue to fund your expansion. Why now? Why do you believe this is the right time for your company to go public through a SPAC?
Well, we've been eyeing when to exactly take the company public. We've always had goals to do that. And right now, with the market for electric vehicles being now starting to establish and climb that that hockey stick in consumer acceptance. It's just the right time to add the capital to the company to really fuel our growth. We're 13 years old. We've been in the market for 10 years selling product. We've amassed 4,000 business customers in that time frame and climbing quickly. And so for us, we had a lot of optionality on the timing. But given the recent, I think, awakening in the investment community that this trend is here to stay, it was good timing for us.
Yeah, at the same time, Pasquale, let's be honest. You guys are not yet profitable. Yes, you had basically $147 million in revenue last year, and I know you're projecting to be profitable a couple of years down the road from here. But by my count, you're at least the sixth EV-related SPAC that's been announced since May. And when I talk with people in the auto industry, people who deal with the EV industry, almost everybody says the same thing. Some of these SPACs are going to blow up in the face of investors. How do you counter that story, that line out there that these are not all companies, and some people would say that about ChargePoint, that should go public right now?
Well, I mean, we're very different. This is an established company. It's had a 10-year track record of shipping product, supporting customers. We are in revenue. We do not have the risks of a pre-revenue company. And more importantly, we're an index for the electrification of transportation, because as all of the existing automakers and the new automakers begin to transition to electric vehicles, that all drives demand for us. So we are broadly attached to the acceptance of EVs. We have very good predictability based on our 10-year track record. We see our revenue directly proportional to the acceptance of EVs. So we think that from an achievement of our financial goals perspective, we have the maturity and the predictability to be able to do that, and it's very different for us.
Another big public debut coming next week. The Wall Street Journal reporting as well. Palantir going to be valued at around $22 billion when it opens next Wednesday. Jim, I'm looking through one of my notebooks here because I've been talking to a number of the investors there some time back, and by the way, they were using the $20 billion number then, too.
Yeah.
Not sure it was really news, but in some ways. But what I did learn from the Journal, actually, which I did not know, was this lack of governance. I mean, if you want good governance, the idea that some of the largest shareholders can actually sell down but still keep, if not increase, their voting power, that's a new one. And then there's the lockup, which that is what I'd been talking to a couple of these large holders about in the past, where it was going to come down in terms of they were going to have this unusual lockup. Remember, on a regular IPO, yeah, you have a lockup, but on a direct listing, which this is, that would be kind of would have been a new feature. How much of your shares could you actually sell? And they're only going to let them sell, the Journal says 20%. They'd sort of been debating where they were going to end up there. So if they're correct, that's a good number to keep an eye on. And then we'll just see how the stock does, because, again, we haven't had that many direct listings. Spotify, Slack are the two ones I can think of. And, you know, it's always an interesting test of the market.
Spotify, in retrospect, was mispriced, even though it went down from where they originally did, because people didn't understand Spotify's direction, which was podcasts. And then you started signing up some very big people for the podcasts. You saw the explosion in listening podcasts, and the stock finally doubled. Palantir, when I read that they could sell down and have more votes, kind of a yunker state over there, I said, who? All right, a sucker's born every minute if you want that. But, David, a lot of people don't even care about corporate governance. They're so used to A and B shares and, you know, companies that just don't, where your vote means nothing, that people don't even think about it. I think you and I think about it because we don't think it's fair. But, yeah.
They don't seem to care. Listen, I mean,
fairness got nothing to do with it.
No, there are these voting structures are in place, not necessarily where you come down and you accrete up and voting power as your economics decline. But Facebook has obviously got special voting stock. I mean, many of the companies we know very well have that, and it hasn't seemed to impede their ability to attract new investors, or for those that have a structure like with significant voting power that's not equal to economics going into an IPO. It hasn't affected their ability to sell the stock either.
No, look, I think that these are things where people say, okay, it's a company, security, cloud. It's got all the right buzzwords, And then they look at it and they are going to say, look, that's an interesting stock. Price it comes around 10. Of course, the actual dollar price, David, means absolutely nothing except for the Robinhood people.
Right. Well, on that note, do you have any expectations here? Again, it's a direct listing, so it's not like there's a book here that they've got together of everybody who's put in their order. And we're not talking about raising any primary capital for the company. Just to explain to people, it is selling shareholders, whether they be longtime investors, employees who have stock who can sell some of it as well. That's what's making the market, so to speak. And then it's going to be up to whoever steps up and what they want to pay.
Well, it's a very hot area, and they have some truly, let's emphasize, they've got some a hold on the security for a lot of government, which people really like. I think that's steadier business than you get from a CrowdStrike, a Splunk. I mean, Palo Alto's got some. Palo Alto valued very richly, but nowhere near as richly as I think we're going to be talking about this one. It is the right niche, and I think people will sell some of the great cyber security and analytics companies like a Splunk that I had on last week to go buy Palantir. They're not going to look at that governance structure because it bores them. I mean, maybe Larry Fink will say something.